Welcome to the third edition of Immersive Outlook. Today, we have the pleasure of having with us Mr. Sandeep Deshmukh, the CEO and co-founder of Elastic Run. Elastic Run is not only transforming supply chain, but also changing the way rural India consumes. It also has the esteemed privilege of being in the Unicorn Club, and that too in a record period of 6 years. Mr. Deshmukh is an alumnus of IIM Ahmedabad and has his educational background in engineering. Sandeep, thank you very much for being with us. And if I just start by asking you the question, what really spurred the idea of a direct distribution B2B e-commerce platform for rural India?
Vivek, thank you. Thanks for this invitation. I'm glad to be here. To your question, to what spurred the idea of Elastic Run, prior to launching this Elastic Run, I worked in various areas of in transportation technology, in transportation operations, and while working in those arenas, you do get a good view of what's happening in the Indian supply chain ecosystem. One of the key findings was that the Indian supply chains were geared for a very minuscule market compared to the total market size of what Indian consumption could be. And one of the key reasons was that the cost of fulfillment of deep rural markets through the traditional channels was substantially high. And that's why that market has remained unaddressed. And then if you put together the triangulation of the mobile data coming in, the shared economy space developing, and the overall emergence of the transportation technology, if you put all of those things together, married with the demand, then we saw an opportunity that we probably have the technology solution to address that untapped market demand. And given the massive size of the opportunity, I think that was a trigger for us to jump off and start Elastic Run and build a network that will open up that untapped Indian consumption market. That's how we started.
We've been seeing over the last year, as well as all the estimates and forecasts about how the whole rural ecosystem can really be a game changer for India. But when I just reflect back on the last few years and just pandemic period that we've just seen through, clearly this segment was impacted in a big way. What was the challenges that you faced during this period? Because you were functioning right through this period, and also what were the kind of opportunities that presented yourself
during the COVID times? I think those were our worst of worst days and best of best days. I think in the initial 3 months of COVID has seen the extremes for us as a company. The first extreme was the moment lockdown was announced, the entire supply chain ecosystem choked. Your supply lines were not coming in. You were not able to operate on the ground. People were not allowed to move. Vehicles were not moving. Production was halted. So in a way, the market just came to a standstill, and that time we were at a fairly small scale. We were still convincing our customers to come on board and target the rural market, and that's actually a big jolt to halt operation for such a long period of time. But a month or two into the lockdowns, and the scenario completely changed. What happened is, while we were struggling on getting the supplies on the ground, the traditional ecosystem is highly fragmented. I mean, the operators there are very small entrepreneurs, very small businessmen, and COVID hit them even harder. That ecosystem almost got wiped out, if not fully wiped out. What that means that the demand just went through the roof. I mean, demand was always there, but there was no fulfillment channel. And because we had some organized semblance of ecosystem running before COVID, we became the go-to player for almost all of the brands in the country to reach out to the rural market. Before COVID, we were trying for at least a couple of years to convincing almost all the brands to how rural demand is, why they should be supporting there. I think there was general consensus that they should go to the rural markets. But given that these are large companies, the decision making takes its own time, and they were going through the process. but COVID just turned around everything, and all the decisions which were pending for 6 months, a year, maybe a couple of years, they just happened overnight. And that saw a massive spike for us from a complete shutdown of the network to going to almost 10x during that year was our journey. And while the opportunity opened up, fulfilling demand in that period was of course a very tough challenge. We had to work with several regulatory authorities, local administrations, get our partners to come and work with police authorities all around. But that was also one area which prove the caliber of technology, that if you have visibility across your supply chain, then marshalling your resources and getting the supply chain re-established in a shortest span of time was only possible through our network. That probably was not possible for traditional channels. And since then it has been a rocket ride. I think the COVID just helped establish the fact that there is a need for such and such channel that can enable the reach to the rural markets. There is an opportunity in the rural market, and the rural markets will continue to grow. So as I said earlier, COVID took us to the lowest of the lowest days and highest of the high days. And I think we became a fairly resilient company and large company towards exit from COVID.
With challenges comes opportunities, and clearly what you just explained is how the pandemic actually triggered a lot of disruption happening. If I may just pivot to the fact about how the organization has achieved the milestone of being a unicorn, and that too in a record period of 6 years. When you reflect back today on your journey, when you started, as you were referring to, when the ecosystem was much smaller, probably people had the need to get into that segment, but obviously there was constraints or mindset in terms of how do you actually get there. When you reflect on your journey, Sandeep, what are some of the learnings? And also if you could also reflect on the whole startup ecosystem, because a lot of it has been spoken about. We are the third largest startup ecosystem in the world today. How do you see this space evolving over the next few years?
I think the problem, the question that you asked had 2, 3, 4 pieces packed into it. One, how does the company become large, and it may become unicorn, it may not become unicorn. Being an unicorn is a validation from an investor side. Becoming a larger company is a company reflection. And then the third question you asked about is the overall startup ecosystem, right? I'll take first thing first, that the company needs to become meaningful, large, attain the scale, and then the valuation may follow or may not follow. What helped us become large is I think, as we call it internally, the two tests the company has to pass was, one is the product market fit. It should not happen that we are thinking in our own mind that yes, there is this particular kind of demand, and the customers are going to love it. It has to be tested on the ground. I think in the first couple of years went into that, wherein we were saying that there is a massive untapped rural demand that we have the channel to fulfill. We operated onto that thesis on a small market for almost couple of years until we could establish there is a consistent pull for the demand that we are generating, a consistent pull for our services into that market, for our products in that market. Once that is established, then the other work that we had to do was on the supply side, working with the brands, convincing them that we have the channel and they should go to this market and we have better channel, and so on and so forth, which was a long drawn journey. Rightfully so, those are established companies, they have their own channels, they have their own thesis, and then for them to understand that this new channel will work for them is a process. But that's when COVID happened, and we got some boost, to convert those decisions. And once those two things came together, that the product pull was established and the supply side equations were established, then came the hockey stick growth. Then the company just went through the roof. The sales went through the roof. And I think that is those two established point, that the pull for your product and the hockey stick growth are the two tests that we put for all of our products internally. And when the company is going through that hyperscale phase, then the entrepreneur and the team's capability to scale to a large level, right? I mean, it takes a different skill to bootstrap something, to create something out of nothing, but then to multiply it, say 100x. You need a very different skill set, and transitioning into that mindset is something that one needs to learn. I think once you get thrown into a deep end, you do learn that, and I think that's how the company got created. A larger company got created. The unicorn status or no unicorn status, I think it is also a function a lot about the external liquidity. I think we are always fortunate to have very strong pull from investors. We have a solid investor base that has backed us through every single round. And then the valuation multiples, how it gets calculated is a function of how we operate as well as how the external markets are behaving. And I think once those two things came together, that's when the unicorn story was built. There's a second part of the question. Then your third question was about the overall startup ecosystem as such. I think what last couple of years have shown is that the startup ecosystem in India is maturing at a very fast clip. I know there are whole there are side effects of growing too fast, but there is clear sign that launching something straight out of college is a very viable and preferred choice for youngsters now. I mean, I work with some of the kids at a personal level, and I see the launching something straight out of their college is their first preference to a larger audience. The risk-taking capability has definitely gone up. The fear of failure is much lower, maybe because conditions of better economic conditions at their home or the ecosystem that they are seeing. So entrepreneur crowd, the pool, the numbers is substantially growing up. Second side of the startup ecosystem, if you look at the investors that we talk to, or our board or the new external folks that we see, I think the VC community has also gone through multiple iterations. And people who have spent 10-15 years in the market, they are able to compare what's happening this cycle versus what was happening in the first cycle. Maybe they can, some of them might be seeing the third cycle also, I don't know. I've seen folks who are seeing the second cycle, and they have clear learnings from how the cycles are moving, how the exits happen, what happens post-exit. So I think that's a great sign of maturity that you don't have, you do have a large set of VCs who have seen cycles multiple times, and that definitely helps to mature. I think putting those two things together, I think India has great future in terms of how much, there's so much of market opportunities, so much of demand, there's so many problems to solve. There's so many entrepreneurs coming in, and if capital follows it, I think we'll have a very thriving startup ecosystem.
I think I'm very, very articulate in terms of the opportunity that exists in the Indian ecosystem, and say the risk-taking ability or the comfort and the rate at innovation is going behind some of this. If I may just pivot now to how do you really see the future ahead? At PwC we do an annual CEO survey, and this year we just concluded 26th edition of the CEO survey. And one of the interesting statistics that came out of the survey was that almost 50% of the India CEOs, think about supply chain disruptions, and that is, in their top 3 risks, if you will, that they need to navigate in their organizations. Being so entrenched in this ecosystem, what, in your mind, are the future trends that will shape this segment?
I think. You're right that most of the business leaders, or almost all of the business leaders, are thinking of supply chain as a key component for the sustainability of the business, or the making it disruption proof is a key challenge for each one of them. I see that the problem is twofold. One is the COVID induced uncertainty, that what happens to the supply chain. And we can definitely go around and solving for that. But I think the problem is even one step back. What if there was no COVID? Was everything hunky-dory? Was everything running fine? And it is not. if you look at Indian supply chain, it's an extremely efficient supply chain. It's very well oiled. I mean, it's for any tech solution. I think the biggest problem is to crack the cost structure that the current supply chain have. But because it is so finely tuned to the last penny, it also does not have resilience capabilities. I mean, the predictability of the supply chain, the data engines that will provide you the visibility to what's where, how things are moving, where they should be moving, that data backbone does not exist. That connection across multiple parties don't exist. The supply chain is not in an organized way, in a predictable way. I mean, it is predictable in a very brute force way than very system driven predictability. And some of the top players would definitely have it. I mean, they would have built their in-house solution, but those are only 2, 3, 4 players. Beyond that, if you look at the hundreds and thousands of the manufacturers and brands, they don't have those capabilities. Until that problem gets solved, the disruption proofness, if I may say that, or the surviving capability of that supply chain will always be under question. That something like this happens again, something like COVID happens again, supply chain would go down. And it is not only about if it will stay or go down, it is also about the efficiency of the supply chain. If you look at, and I'm talking of some of the finest brands of the country who probably run the most tight supply chains, would at any point of time in our calculation would have at least 25% of excess inventory moving into the supply chain, because everyone is working in isolation, everyone is working in their own pieces. No one has visibility of what's coming or what they should be asking. Everyone operates on what they have received and what they are going to send forward. And the situation is worse for smaller players. Worse in the sense they may not increase the inventory, but they definitely lose the sales. They definitely has lower fulfillment rates. I think we as a country or the overall ecosystem needs to come in some sort of integrated platform, or at least individual companies might have to build it in, wherein you have a clear visibility of what's coming throughout the month, at what point of time, in what pin codes, in what geographies of the country, what SKUs are going to get consumed, and how they should be manufactured. So a complete integration from point of retail sales till point of manufacturing. I think unless we build that, the resilience of the ecosystem will always be, a brute force or wishful thinking. So, I mean, we definitely intend to build one such platform, but one is not going to solve for it. I mean, there are so many industries, there's so many supply chains. We need some sort of solution there to get to this disruption proofness of the ecosystem.
If I may now pivot the conversation, you did mention earlier about having an integrated view, right from the manufacturing to the sales, etc., so that it's predictability. Clearly, in today's world, everything is technology driven, and you see a lot of AI and ML, analytics come into play. In fact, we've seen you talk a lot about your caption about thinking by a machine but execution by a human. So can you tell us how do you really integrate technology such that you're one step ahead in this game?
As you rightly said, I think the supply chain game at the end of the day is a data game. So all of the technologies that we build are essentially to collect the data at every stage, collect it in time, and then basis of the data, you trigger certain actions that will eliminate the anomalies. That's the whole plan. So essentially, probably supply chain is the best example of how data can solve so many problems. AI keeps coming on top of that for specific actions, certain actions where you need humans, certain actions which certain decisions which can be made by system, that's when the AI comes in picture. To give you an example of how data dependency or how data intensive this work is, if you ever visit us and look through our systems, you would know that you pick up a particular village in the country, and there's a good chance that we would be able to tell you what's going to get consumed in 2023 in each of the month, in each of the week, in each of the category for that particular village, and broken down to that a particular store in that village. I mean, there's no rocket science to this. This is the data that we collated over last, say, 3 odd years. And the deviation from the data is minuscule. I mean, of course, there will be some new items that get procured, but to a fair degree of the list of items that will get consumed in that market, you can predict that to near 100% certainty. To up to 80% certainty, you can predict to what quantity they are going to purchase. Now, just imagine if this data is available at an ecosystem level, because then you can map that data all the way till your manufacturing, and theoretically, essentially, you can eliminate all of the storage points in between. It's not practically possible, but you can do some scenario analysis wherein you can map the point of manufacturing till point of consumption almost a year in advance, and at that point of time, your supply chain resilience is at a very different level, because you probably would have made all of your future trades at a much earlier dates. Now compare that to what happens today. So what happens today is by market, or maybe at a state level, most of the companies have predictability to what's going to get sold, but that does not get refined at an SKU level, at a store level, at a village level. It stayed at a fairly coarse level. And then from that point onward, they start working backward to what I would need in my regional storage centers, what I will need in my national storage facilities, when do I manufacture. So at each of the level, there is massive drop in the information, and every time the information drops, you keep adding buffers, and that buffer is your inventory. The buffer is your dead working capital. And more importantly, the amount of SKUs that fly through the system, there is massive imbalance in terms of what is the total size of the demand that you predicted versus what are the configuration of the demand broken into various SKUs. So in our view, I mean, there is at least 25% odd inefficiency setting into this in this gap of planning, or where data and technology can help eliminate all of this. And for eliminating this, actually you don't need any other change in the physical ecosystem. The only change that we need is the visibility of that data, and putting in those probes of data in the ecosystem wherein you can read all of this. But even this is pretty far away for the ecosystem to where we are today. But at least we know what the output solution required for that is. Then on top of that this sits the various AI engines. Once you have the data, then you'll and we do it day in day out in our system, that you know that there are 100 actions every day that gets triggered basis of the imbalance in the real world versus the projected world that you will know. And out of those 100 odd actions, you will realize 60 to 70% of the actions can be automated. I mean, there is no human interaction required there. I mean, that's how AI actually evolved. I mean, AI is a very lofty world, but essentially every tiny decision that you make are part of all those AI engines. And that helps you in eliminating wastages, damages, eliminating any excesses in the ecosystem. And I mean, we have at least 25 different bots, AI bots operating, who continuously keep bringing the actual curves of the demand and supply in tune with what we had projected. And there are tons of data engines that we keep operating. So I would say at least 25% of our tech today operates onto these two pieces. So how do we consume all of this data, and how do we leverage AI to fix the ecosystem on an ongoing basis? That's about it.
Thank you so much for that, Sandeep. Clearly, technology is changing the way businesses operate, and just the amount of intelligence and data that it can give and predictability it can bring in is amazing. If I may pivot, the conversation to a slightly different subject. As responsible businesses today, everybody obviously is adopting technology for efficiency, for better predictability, but it's also about sustainability. How do you make sure that we are responsible to the larger stakeholders and ecosystem in which we operate? I'm very curious to understand, how at Elastic Run you look at sustainability, not just from an organizational standpoint, but also when you look at your supplier ecosystem and the stores and all the outlets that you actually distribute the products to as well.
That's a great question. And I must say, when we started, we did not start as a ESG company or social company. We started as for doing the business that we are doing. But over a period of time, what we realize is our existence itself generates tons of the ESG goodness out of the business. And why do I say that? See, our core belief is we are that common aggregated platform that helps hundreds of brands reach out to those millions of customers in the rural markets. And the very fact that you're able to consolidate all of this supply chain together onto one platform, that in itself eliminates so much of inefficiencies in the physical world. To give you an example, if you pick up a corner of, say, a village in Maharashtra, a village in Andhra Pradesh, and we will be carrying at any point of time 40 to 50 brands into a village on any given day. That means before us, those 40 odd brands would have gone through, if not 40 channels, at least 10 odd different channels going into that market. There are so many touch points, vehicle movement, people touch points, and multiple handling happening for all of those brands. The moment we consolidate all of that gets consolidated to one single run. And as you would know, running 10 1-ton vehicles versus one single 10-tonner vehicle, or running one team that manages all of this and using the right technology essentially eliminates all of that wastages. So we have done one study in terms of how much of carbon footprint that we have reduced for the vehicle going in. The numbers are substantial. I'm hesitating quote here because the report is finalized, but that's a massive benefit that we could bring in. So that's not purely onto the carbon footprint of reducing vehicle. It also reduces overall wastages, right? As simple as the packing material that you use or any resources that you use for handling, the aggregation brings that down. The second sustainability advantage that we have, and this we did not go and plan, but that's how it ended up being. We're an aggregated platform. What that means is almost over 70,000 people from deep rural villages operate onto our platform, and these are the folks who have never worked in an organized workforce. They have not seen money come into their bank accounts. But the moment they start working with us, they have a steady flow of income, and through an organized channel. This is not a cash payment someone making to them. He or she can come onto the platform, see what work is available for them for the next month, commit to it, execute that work, and get paid in their bank account at the end of the month. So there are this almost 60 to 70,000 people who have created their financial identity because of this platform. Of course, this work was done by someone else through some other unorganized channel earlier, or may have taken some time. But bringing so many people into an organized workforce, and this is actually the bottom of the pyramid. The monthly income for most of our partners before we go into that market is sub 10 to 15,000. In the villages, probably that's a higher income, but to give that additional income to someone definitely moves the pyramid. In my view, that I don't know if it matches the sustainability advantage, but it definitely delivers a big social impact for us. Every time we go into those markets, we see how those lives have changed. So in terms of eliminating all of those inefficiencies of the ecosystem, reducing the carbon footprint, and bringing the bottom of the pyramid into the formal ecosystem, I think are some of the key ESG benefits that we as a company have delivered.
Sandeep, thank you so much for that response. And that brings me to one thing which I wanted to ask you. A lot of it that we've spoken about right now has been about business operations and supply chain and what the headwinds will hold. But what you're actually doing is not only connecting the rural consumers to the rural stores, or the Kirana stores as we call it, but also connecting financial institutions and driving financial inclusion. Now, this is a much bigger agenda and has a lot of other benefits to all the consumers. Could you tell us how this comes into being?
Thanks for the question. I think this is another big area that we are working on. It's a slow churn, but I think it's a very, very impactful churn. So what happens today is we operate with stores which are really in the far-flung areas, and we are very, very small. I mean, small in the sense their monthly throughput is anywhere between 1 lakh to 2 lakh a month. They earn anywhere between 15,000 to 30,000 a month. Now, what is happening until now is this store, and again, maybe before the UPI came into picture, they have almost always operated only in cash economy. Now at least the UPI codes are showing up on the stores, but the penetration there is very, very small. I'll say sub 1% of their payments would be happening over UPI code, but at least they have some access there. What has happened is the stores who operate with us, they have probably for the first time have started buying through an organized ecosystem wherein they get full account visibility of what they have bought in the last month, last 6 months, last full year. Now, just having that data and verifiable data in one place, I mean, our data, of course, goes to the GST portals, and even if the store is not GST registered, at least the data visibility is there. Now, basis of that data and the consistent payment track record of the store with us, I mean, we anyway sell everything on cash on delivery or prepayment, so everything is paid for. That this data becomes a crucial data mine for the banks or the financial institutions who want to penetrate and go into that market. So lack of visibility was a challenge for them. The second big challenge for this for the banks and financial institution was reach to this store. So even if I give loan to you, how will I recover the money? Do I have all the digital channels set up? If not digital, do I have the physical channel set up? So just the accessibility, physical and digital accessibility of that market was a key challenge. And those are the two big problems that we saw. Couple that with the servicing network that we have, this makes it a very potent combination for the banks to extend any loans or other financial products to the stores. So I think through that channel we are tied up with several NBFCs and few banks wherein they have started lending to the stores. And the NPAs in this market are extremely low. I won't say it's zero because it's just little above zero, but they are better than most of the even the best of the banks NPA numbers in the market today. And one of the reasons for that is these folks are seeing credit for the first time in their lifetime. It's a formal credit coming into them, and the ticket sizes are fairly small. I mean, maybe 10,000, 15,000 a week or 30, 40,000 a month, and the repayment track records are extremely good. That is another engine that we want to build in, that there was always this demand that remain untapped. There is always this supply side who want to service that market. And because of the channel now, because of the platform, the two parties can communicate with each other at nearly zero cost.
It's not only solving the supply chain and operational issue, but also leading to so much of upliftment in people's lives. Truly, truly inspirational. Sandeep, it has been a pleasure to have you with us, and look forward to our interactions.
Vivek, thank you. Thanks for this invitation.